Hi, welcome to the Market Alert for Friday, the 20th of October 2017. So starting off with the pound yesterday, just slide this over. You can see the market was fairly range bound. We had a bit of a drop here just after 9:30, and the market more or less rebounded, found resistance at the 132 level, and then back to being sideways. And then overnight we've seen the pound move lower by 50 points. A lot of activity, that is, for the overnight of late, and they see the market there finding a bit of support at the moment. In the daily chart, you'll see why it's finding support, because we're at the 76% area there, and a very useful area of support. So let's see if the market can actually hold there, and the buy signal that we have currently shown there will be filled. Highly unlikely, as we're already up to the second bar and haven't got the momentum, and also there's some selling around here in this bar. So the market managed to move higher on relatively low volume, and then hit a brick wall with the buying volume there, just to make sure. There you go, you can see there the selling volume, not buying volume. Selling volume at the 20 bar average, so it needs to disappear if the market is going to move higher. Let's see what news we've got for the last day of this trading week. Public sector net borrowing from the UK to show an increase, existing home sales from the US, and that is it. Nothing else out for today. And in the Dow, well, yesterday, as I sent a note, we had a big sell-off on the 30th anniversary of the 1987 stock market crash, 160 points down. And as I said in the note, I expect the market to move back to the upside, and that's precisely what happened. A very interesting start to the session, volatile there, and eventually the market finding support down at the 23,050 level. And then the market moved all the way back up. No surprise, as I keep saying, they want the market higher. Well, this is what's interesting. We've got the market higher on the overnight. I don't know what happened there, no idea, but we've moved up 100 points on the overnight. If that's not 100 points, then it isn't going to be far off. It's actually 128 point move on the overnight. Not seen that for a very, very long time. So it's going to be interesting to see what happens in the pre-market session. There's obviously something overnight that's occurred, certainly in the early hours of the morning. It's 3 o'clock where this move's taken place. I've had a look around. I can't find anything on it as to why it's done this, but whatever it is, the market's higher anyway. They've used the excuse to drive prices higher. And this is what it looks like in the daily chart. For those eagle-eyed amongst you, you can see that the volume is high for yesterday's bar, and I quite expected the market to be sideways following this, because obviously there was some selling around yesterday, and then they brought the market back. So again, I wouldn't necessarily say that the buyers overcame the sellers. It's a case of the Federal Reserve stepping in and buying up the selling to stop the market from moving lower, and not adding to the liquidity of the market, but just absorbing the selling that was around, and then bringing the market back. So we've got a new all-time high in place already on the overnight, heading for the 24,000 level. Might as well throw it in there now. It could be 25,000 before we see this market stop at the rate we're actually going. So that's 23,285, or nearly 300 points from the close above the 23,000 already of this week. Just insane climb in this market now. Right, let's have a quick look at the implied before concluding. And on the implied volatility front, we've got the market up 786 from 765, which you'd expect with the drop of 160 points in the pre-market session. Let's see how this fares today. If the market remains sideways, as there's no other news to move the markets, then I would expect this to drop off. If it doesn't drop off, it will go back to the thinking that we had yesterday, where we saw the market moving higher along with the implied volatility, which is not the way it should be. As you know, it's a good indicator of what the market's doing. and yeah, it should be stock market up, volatility down. Okay, that's it. Unless something comes out of the woodwork today, I would expect a quiet day and maybe some sort of consolidation. Who knows? It's hard to say these days, apart from one thing that is guaranteed: they want the market up, and they'll continue to pump it up as long as they can, until they can no longer, or they start to offload and bail out. It's certainly a bubble. It's a massive bubble, and it's a matter of how much further they can actually blow the bubble before it actually pops. Right, that's it. Have a great weekend. As ever, thanks for watching. See you in the next one.